to simplerstocks.com. This is Don Kaufman, and tonight I am going to be looking at a trade on Herbalife. There's one we have not talked about in quite some time. In fact, here on simplerstocks.com, I don't think I've ever talked about Herbalife. It's a product I've traded and followed pretty much since for those of you that do follow this underlying, Herbalife is the underlying that really Bill Ackman and Carl Icahn were fighting over. Ackman being the short, Icahn being the long. So we haven't talked about it in quite some time. The stock fell to some depths over here. And in fact, if we take a look here on just a regular price chart, the product actually fell all the way to the lows of $27, sat in the $30 range for quite some time. But from March to the present, we are looking again at a $54 product. I believe coming into some pretty heavy resistance at these levels. And I'm actually looking for a short opportunity in this, and not just from a price action perspective. Granted, I was momentarily looking at a percentage basis, and I'm actually going to take you into that perspective here just a little bit. I'm going to go show price as percentage, and just from some of the depths just a few months ago. So go ahead and back the chart into a shorter time frame. Let's go a 3-month daily here. We're looking from a price of $33 to the current. It's a 57% increase. Again, a 57% increase in the last 3 months. And yes, the idea in the trade that I'm going to be creating here, it is stepping in the way of a freight train, but that's what I am. I'm a contrarian. Just a week ago, I talked about Netflix and getting short Netflix on a day it had exploded some $20+ and it worked. So again, looking at Herbalife, I'm looking for an ideal situation to get short. However, how are we going to construct the trade? Well, this can be done either stocks or options. One of the things that really drives me specifically to Herbalife at this point in time is the kind of monumental drop in volatility lately. So if you look at like volatility, it's dropped off substantially. Now that's options or the implied volatility. So it's the way the market kind of gauges risk, if you will. The implied volatility is gauging risk. And right now, what is it saying about Herbalife? It's saying the risk has dropped substantially. And another way to view that, and I'm looking here on Thinkorswim, the IV percentile is 12%, meaning that if you looked at implied volatility over the last 52 weeks, it's at one of its lowest levels that it has been any time inside of the last 52 weeks, which, if you're going to trade the stock, isn't incredibly important. I'm actually using the implied volatility not necessarily to discern per se whether the trade stocks or options, but I'm using it to kind of create a directional bias to a degree as well. So we have a stock that's flown higher by an amount of over 50% in the last 3 months. We have implied volatility that's just rock bottom out there. It's got a nice, again, setup to sell off here, maybe, only for a short period of time, but that's all we're ultimately going to need. Now, if you're going to use stock in this position, if you're going to use stock, consider the expectations of movement in the next 23 days. The market's pricing in like a $5 move, either up or down. Okay, again, a $5 move either up or down inside of just the next 23 days. And it's one of the reasons that when I consider doing this trade, and when I do execute this trade, and I will execute this trade, I am likely to use an options position to define my risk. I'm more comfortable with that. But if you are going to use the stock, set a stop order. You're probably going to have to give it a little bit of room to breathe. That is, the stock's going to be up, $5. The stock could be down $5. You're going to have to give the stock some room to breathe inside of this time horizon of about 23 days, which is the expectations of the price drop that I'm looking for should be inside of like the next 3 weeks over there. So again, some expectations of a price drop inside of the next 3 weeks. It's about $5 of breathing room if you're going to use the stock. If you're going to look at options, all right, the consideration here, I would use a spread. The kind of spread I'm looking at, well, I'm looking at the July 2 expiration here, July 2. Okay, that's the second set of weeklies listed for July. I'm looking at the 55.53 put spread. That is purchasing the put spread. Now, yes, I am buying an option spread. I'm known as an option premium seller, but in this case, I'm actually buying the spread. I'm buying it for just around $1. Okay, I'm going to risk $1 to be able to make $1. It defines my risk, given the fact that the stock is, we can overemphasize the idea of overbought. Okay, clearly it's overbought. Things up 50% in 3 months. Could it have some room to run? Absolutely. And we'll give it some room to run. But the expectations of it backing off here in the next 3 weeks are real. So this is a trade I'll go ahead and look to execute tomorrow. And we'll kind of track, on a day-to-day basis here, week-to-week basis inside simplerstocks.com. Thanks a lot, everybody. Join me here in the future. Again, that's Don Kaufman at simplerstocks.com. Bye-bye.